Good afternoon, everyone. I think we have only 13 participants so far in an afternoon. We'll just give it a couple of minutes to see if anyone else is joining, and then we'll start. I hope this is okay with everyone who's already joined us. Thank you so much for taking out your time. Good afternoon. I think we will start now while others are joining. First of all, thank you everyone for joining this webinar and taking out your time for this webinar. We are going to discuss about UAE e-invoicing, what businesses need to know today. Before we start, just a couple of pointers on housekeeping. If we can keep all of ourselves on mute so that there's no background noise, that would be great. Thank you so much for understanding. Also, if you have any questions during the presentation, you can drop it down on the chat. We will try to cover all your questions during the Q&A session towards the end of the webinar. And if anything gets left out, we will make sure that we respond to your query through an email. Joining today with me on the panel is CA Prakriti Dangli. She is the director with our taxation practice in S&B Consulting. He has over 15 years of experience in the domain of tax, transfer pricing, international pricing, and corporate tax. She has previously worked with PricewaterhouseCoopers. I'm also joined today with Praveen Sawant, who is the business head enterprise solution for Taxialla. He has a lot of experience on implementing e-invoices across many countries. We will talk about it during the presentation. And I am CA Manish Bucha, Managing Director with S&B Consulting. My experience mainly is in the domain of process improvement, cost optimization, risk management. I will take you through the presentation. In terms of the content of today's discussion, can we move on to the next slide, please? Yeah. We'll have a brief introduction about S&B Consulting and Taxialla, our partner, technology partner on the e-invoicing journey. We will briefly touch about what is e-invoicing in layman's term. We are also going to discuss about the global transition into e-commerce, e-invoicing and digital compliance. We are going to, Prakriti is going to delve in depth on the FTA requirement, the mandate for e-invoicing in the UAE. We are also going to discuss the PEPPOL five corner model, which is applicable for the UAE. And in terms of what businesses need to do currently to be able to move on to e-invoicing, is something that we will discuss towards the end of the presentation. If we can move on to the next slide, please. So S&B Consulting, we have been working since 2018 in the sphere of risk advisory, tax advisory, including corporate tax, VAT. We have also been working on a lot of management and business consultancy. And now we have ventured in the e-commerce sphere along with our technology partner, Taxialla. S&B is already um, is a partner with PEPPOL Authority. And we are in the process of becoming an ASP with the FTA. This is relevant as far as the e-invoicing is concerned. We have a team of a strong team of consisting of chartered accountants, MBAs, engineers, lawyers in our team with a lot of experience with consulting and as well as in industry. Most of our team are ex-Big Four. We provide you tailored solution for your requirement, and we ensure that there is quality and timely deliverable in whatever we undertake. In terms of our technology partner, Taxialla, they were founded in 2015 in the USA. Taxialla has been implementing e-invoicing across 20 plus countries. We will speak about it more later during the presentation. They are a regulatory technology platform providing compliance requirement for taxation authorities across the globe. They are a certified people access point, ISO certified. They have a very strong compliance framework as well as compliance with the VAT requirement. And in terms of their recent experience, Taxialla has been providing e-invoicing services to more than 500 customers across the site. In brief, the journey about Taxialla's e-invoicing journey, we have already covered on that since 2015. Once they were founded, they have been implementing e-invoicing across various countries. And currently, they are an ASP with the FTA in UAE. And along with S&B, we are going to provide the invoicing services within UAE and other GCC jurisdictions. Next. So in terms of very quickly, in terms of a layman's language, what is e-invoicing? It's nothing but a digital transmission of invoices from the seller system to the buyer system. And what it does is that while you are transferring the invoices from the seller system to the buyer system, it also gets recorded and approved by the FTA. This is a unique proposition as far as UAE is concerned, and we are going to discuss this in detail while we are going to discuss the PEPPOL five corner model. The e-invoicing ensures that the formats are standardized. It replaces all your paper and email and word invoices that businesses have been used to sharing with their customers or suppliers. And definitely when we talk about digitization, which is primary objective of the government here in UAE, which has been focusing in terms of digitizing the business, it will ensure that the businesses benefit from reduced error, ensure tax compliances, and it will definitely bring in efficiency within your overall processes. Can we move on to the next slide? So what does the e-invoicing objectives of e-invoicing and what it tends to benefit and how what improvement it tries to bring in? The first thing is digitization, as we just spoke about. It will ensure that human intervention is reduced and there is fiscal compliance with the UAE FTA requirement. It will definitely bring in efficiency and compliance with your tax reporting requirement. It is going to enhance the taxpayer's experience and user experience while bringing in more effectiveness within your process. And at the end, it is also going to contribute to the economy through competitiveness of the economy and utilization of the big data, which will be gathered and generated using the invoicing platform. I will now leave the platform to Prakriti, who is going to discuss more in terms of what are the global trends and what are the requirements of FTA. Prakriti, over to you.
Thank you. Thank you so much, Manish, for setting the tone for today's webinar, where we would be discussing about the e-invoicing. We have seen what e-invoice means, what it means to the government, what are the objectives of it, and let's understand why this is coming into the place. So it's not just in the UAE that it has just come into place, but the e-invoicing has been prevalent across the globe, right from Latin America to the EU and Asian regions since more than a decade now. So the governments are going digital, and e-invoicing is one such tax transformation that governments are bringing in order to achieve tax transparency and reduction of the misuse of the taxes. Now, the initiative in the UAE was introduced and announced in 2024, and it will be effective from 2026. The UAE has been adopting the PEPPOL five corner model. We will take this understanding of the model in greater detail in the going forward slides. And overall, if you see, the our source says that more than 80 countries across the globe have adopted the e-invoicing regime, and UAE is again getting into this race in a phased rollout manner. Now, if you see, there are two two mechanisms or models for introducing the e-invoicing in any country. The countries either go for PEPPOL model or a CTC clearance model. As you might have heard that UAE is going for the PEPPOL model, what it means in a very layman's term is PEPPOL is a global framework for exchanging the invoices or electronic invoices in a very secured way. So when the invoices is raised by the supplier and it goes to the buyer, it happens through the service providers, which are again the certified or the accredited service providers. And for specifically UAE, the government agencies, the government tax authorities have an information on how the data has been passing. Whereas in a CTC clearance model, while the buyer issues, while the supplier issues the invoices, it goes through the government portal where it has been cleared or validated before it reaches to the buyer. Now, if you see on the right hand side, the countries in the European region, such as Italy, Belgium, France, etc., have been using the PEPPOL model. Even in Asia, countries like Singapore and Malaysia have been adopted PEPPOL. Now, in the Middle East, Oman also introduced PEPPOL model, while UAE is going for the same. While the CTC clearance model, the classic examples are e-invoicing in India and KSA. So the unique thing about CTC clearance model is the mechanism can vary by country to country, vendor to vendor, and based on the ERP system that the businesses has to adopt. Now let's understand very specifically about what does UAE has to say about their e-invoicing regime. What are the features? What is the scope, applicability? When do they start, etc. So UAE has adopted five corner model, which is a decentralized format. The invoices in the electronic format moves from the supplier to the buyer through their service providers, and the tax data, the TDD, is passed on to the Federal Tax Authority. The invoices in this regime needs to be in a well-structured format, which should be machine readable. Only XML and JSON are the structured formats which has been uh, provided in the UAE invoicing mandate. Applicability will be there for all the business across all the invoices. But to start with, currently and immediately, the applicability is for the B2B transaction, which is business to business, and to the B2G transactions, which is business to governments. Eventually, it will also cater to the business to customer transactions. The movement of the invoice from the supplier to the buyer through the service providers in this regime happens on a near real time basis, which takes a fraction of second to pass the invoice and validate the same. And there are specific data fields which has been released by the FTA, which are about 50 data fields which an invoice needs to have mandatorily so as to be call itself a proper e-invoice. And last but not the least, the implementation is to be done in the phases, which we will take you up in the next slide. So businesses which are having revenue of 50 million and above are required to appoint accredited service provider by July 31st of July 2026, and they need to start the e-invoicing compliance by 1st January 2027. So we may call them large businesses, and they need to start their e-invoicing journey at the very first phase. Then eventually it will also float to the small businesses where the revenue is lesser than 50 million dirhams, where the time duration is not having a very big leap, but just a 6 months difference where they have to start their e-invoicing compliance journey from 1st July 2027. And for all the government bodies, the invoicing will start from 1st October 2027. But before all of this, the government has also announced an official pilot program where they're going to invite the taxpayers, the businesses, into a taxpayer working group when from 1st July 2026. This is a very good initiative by the FTA where they can test their e-invoicing, how it is happening, how the data is flowing from one end to another, and how is it reaching to the FTA. There may be businesses which are not part of the working group. However, they can volunteer themselves and take an initiative for early preparation ahead of the mandatory rollout of 1st January 2027. So from 1st July 2026, there are two golden opportunities to start your e-invoicing journey and try how everything is coming into the place. The duration between the pilot program or the voluntary implementation and the actual implementation is about a matter of 6 months. But the important point is that if you start early, you have enough time and space to review how everything takes place in the whole process of e-invoicing. So we recommend that a voluntary step is taken by the businesses to achieve this journey. Another important point is appointment of an ASP. So the government, the FTA, has released a list of 9 pre-approved service providers, and every invoicing or every business has to appoint one ASP. There could be different ASP for buyer and seller, of course, but your accounting system or the ERP needs to be connected or integrated with the ASP to achieve the e-invoicing compliance. So the important dates for appointment of ASP here is 31st of July 2026 for the large businesses. And in case you're opting for voluntary implementation, or you are becoming part of the taxpayer working group. In that case, earlier than July, you need to appoint an ASP.
If I can just add to what Prakriti mentioned on the ASP, there is a pre-approved list of 9 ASP which is currently there. But having said that, there's a number of other people who are registering themselves with the ASP, including S&B, and probably in a couple of months you will find that the list is growing.
Yeah, thank you so much, Manish, for adding this point. Now, in terms of the applicability as to what is required, who's requiring, as we see, B2B and B2G transactions are covered. The invoices need to be raised at the time of supply or as per the pre-period to be prescribed by the FTA. The invoices needs to be transmitted and exchanged through the ASP and needs to be validated by the FTA. The format, as we discussed, has to be an XML format, which is the UAE PINT format, which is the compliant format for this. And every endpoint in this will be issued a unique invoice identifier, which is UUID, which is an identifier for them that they are the endpoints. The e-invoice needs to be digitally signed and should contain those 50 structured data points. Now, as we have seen that the B2B and B2G transactions need to be covered. However, there are certain exclusions for certain businesses which are listed here. Very quickly brushing through them, the government entity which are conducting their transaction in a sovereign capacity, international passenger transport, where the airline business, where they are issuing an electronic ticket, any other ancillary services of airline, where the services are provided to the passengers, the international transport of goods, certain financial services which are exempt or zero rated in VAT, and any other transaction that the ministry or the MOF may come up with. So these are the exclusions, but other than that, all the businesses are mandatorily required to come into the net of the e-invoicing basis their revenue thresholds. Now we have spoken about the 50 data fields which are required in e-invoicing. It seems a lot that an invoice can contain so many items, but you cannot miss any of them while you are entering the e-invoicing regime. A few of the line items you may already be having in your e-invoice, in your regular invoice or the as-is invoice that you are currently issuing. But you need to look for additional items or the additional fields that are currently not there. All these lists are available in the data dictionary released by the FTA, and this is as per the UAE PINT model. Now, apart from this as well, the current accounting software or the ERP might be using certain nomenclatures which needs to be looked up with the mandatory data fields. So 50 data fields and additional lookup is required. So now I would like to hand over to Praveen, where he would explain the e-invoicing five-corner model adapted in the UAE. Over to you, Praveen.
Thank you, Prakriti. Thank you, Manishji. So let me share my screen. Hope you can see my screen.
Yeah, it's visible. You can also put on the slideshow.
Okay. So let's understand typically what this five-corner model looks like. So simply, you can just consider there is a two different mobile operator, which is nothing but a corner 1 and corner 4, and these are the corner 2 and 3 is their operator. So without telephone operator, we can't speak, we can send the messages, we can WhatsApp it. So similarly, this model will work, and this corner 5 is nothing but a telephone authority of the government. So let's understand in a more detail how this data works. So in terms of a business example, now onwards, I will talk about this corner. So corner 1 is a seller. Now corner 2 is a sending access point. 3 is a receiving. 4 is a buyer. And 5th is a basically a FTA. Now, why we call it as a reporting model and why it is not a clearance model? Because here government or FTA is not doing any value addition here. So they are only doing the structural data validations, and then they are storing the data. Like as Prakruti said, there is a CTC model in Saudi Arabia, India, or most of the Asian country where the data is controlled by respected tax authority, and plus they are doing the value addition. Like something will give the QR code, something will give the IRN number that you have to print, and then you can issue the invoices. But here in PEPPOL, it is more on a decentralized. So decentralized is this buyer and seller is different, FTA is different. Now, let's understand first use case that both seller and buyer are coming under a e-invoicing. It means both are in a phase 1 more than 50 million AD and above. So how the process will work? So first of all, a customer, that is a seller, has to select the ASP. Now, ASP, you will get a final accredited solution provider list on MRA tax portal. First, you will see on a MOF. After that, when you will log into the MRA tax portal, which is a portal for onboarding customer and selection of the ASP, there you will get a complete list. There you will get a S&B name as a ASP. When you click on the link besides the S&B name, there is one pop-up window will open. Now, this is, I'm explaining you every and each of the taxpayer. So this e-invoicing is applicable to the TRN number. So whether you are a VAT registered or you don't have a VAT number, all the company who got a corporate tax and got a TRN number, this e-invoicing is applicable. Okay, so here first, when you select the SNB as a ASP, SNB will create a PEPPOL ID for you. So what is PEPPOL ID? PEPPOL ID is nothing but a TRN number of seller. Okay, and then they are going to store this in SML, which is called Service Metadata Locator. So you just think in a normal way that SML is your telephone directory or address directory of UAE. Whoever is coming under e-invoicing, all of their PEPPOL ID is stored in a SML. Okay, so here from the seller, you have a ERP system, you have an accounting system, you may have a POS system or any source system. So we will provide you a multiple integration options. Using that, you will just send your tax invoice from your ERP to the SNB. Now here, first thing SNB is going to do, they are going to validate the data. Now today, when you are generating a tax invoice, it's a self-assessment. Nobody is validating. In a sense, whatever the validations built in ERP or accounting system, that only you are doing. But you are not checking with any other things. But now onwards, there is a complete change because if you are doing some short information, SNB will first reject that invoice and first they will say this information is missing. So first thing at a user level, educations and training is must. So second here is once we receive the data, we will configure, we will convert that into a pinned AE XML format and then do the validation. Now, how SNB will come to know that whom I had to share this invoice. So first thing, in your tax invoice, buyer TIN number or TRN number is there, right? So that TRN number, S&B will validate here. In SML, they will come to know buyer PEPPOL ID, and then the buyer PEPPOL ID is attached with the who is the authorized service provider for this buyer, right? Just like when somebody look at your mobile number, whether it's a Etisalat, Due, or any other operator, you come to know, right? Similarly, every PEPPOL ID who he registered as a ASP, that endpoint is coming. Now, in this example, this buyer ASP will be S&B or maybe some other ASP model. So first thing, corner 2 will share the invoice with corner 3, and same time he will also share this tax invoice to the corner 5. Clear? Now this receiving access point will validate the data. Now what is validation? They will check whether all the mandatory, conditional mandatory data, the pinned format, structure, everything they are going to validate. And if he is satisfied, he will first send a message to the corner 5 that I accepted the invoice or I have rejected the invoice. That is called MLS, message level status. Okay. Then corner 5 will also validate the tax invoice. Same validation, structural validation, and mandatory and conditional mandatory. And then corner 5 will inform corner 2 that I accepted and rejected the invoice. Okay. Now, what is the ERP IT team expectation or finance teams or operation teams? How they will come to know whether my invoice is received by buyer and FTA. So here S&B will give you the message to your ERP back that corner 5 and corner 3 accepted the invoice. Okay, so this is how every taxpayer or seller will come to know I have delivered my buyer. Okay, now here once this buyer receive the invoice, okay, he will first message to the corner 5, and then the same XML he is going to give it back to the buyer. Now first he will ask buyer how you want data back, because this invoice is AP invoice for buyer, right? So he will give the data in XML, PDF, Excel, whatever format that basically he will provide. Clear? Now, if you see here complete flow, there will be a no PDF, no hard copy, no soft copy, nothing is coming out of from this. It's all digitally exchanged between seller and buyer. Now, still in this example, if buyer expect that you should give the PDF copy, how today you are giving. Legally, you don't need to share, but still as a, you can say if he is insisting, then you should give the PDF, but the XML what I have shared with the FTA, that XML if you can attach to the PDF, so you will give some weightage of that invoice. So this is the AR case where both the seller and buyer are coming under a e-invoice. Now consider the second use case. Now, as today also you are doing the business, some are into a construction project base. So along with the tax invoice, they have to share some additional supporting document like a packing list, dispatch advice, test certificate. Like FMCG, they have to also give the some document. So every verticals, everybody has some and other documents need to share. So today how you are doing, along with the tax invoice, you are attaching that PDF copy and sending to the buyer. Now you don't need to do that. So the option here is, if you want to send a tax invoice along with the 3 additional documents, you can send it to the S&B through ERP integration. Okay. Now what corner 2 will do, he will only send tax invoice to the corner 5, but additional 3 document he will deliver to the buyer ASP. and then buyer ASP will send this 3 additional along with the tax invoice to the buyer. So if you see here, there will be a no email, no manual efforts, nothing. All documents can be exchanged seamlessly between seller and buyer. So typically, the idea of PEPPOL or idea of FTA or UAE, that less paper, no manual work, no more attachment, no more bandwidth. Everything should be digitally exchanged between seller and buyer. Now, consider the third case. Now, you as a seller, you are coming under a phase 1, but buyer is not coming under a phase 1. He may be the phase 2. So how this will work? So first is similar way, you will send it invoice to the S&B ASP, and then S&B will find out whether this buyer PEPPOL ID is there or not. He will get to know that buyer isn't coming under a phase 2. So we will just report to the FTA this tax invoice, and we will inform seller that please share the PDF copy. How today you are sharing. Till the time buyer is not coming under a e-invoicing. Once he comes under e-invoicing, you will stop sharing the PDF copy. Now, fourth use case is, consider you are doing the cross-border transactions. Export. How you will do it? For example, if you are doing export in Saudi Arabia, so Saudi Arabia don't have a PEPPOL. So same model, when I will share the data, I will search in SMPL and I will come to know Saudi is coming under a CTC. So there is no PEPPOL. So I will only report this invoice to the FTA and I will inform seller, please share the PDF copy. But consider you are doing export in Oman, Singapore, Malaysia, or maybe any Europe country or any country where PEPPOL is there. So get the example of Oman. So once I receive the data, tax invoice, I will search in SMP. So SMP is nothing but a service metadata publisher. This tells what are the documents you can exchange between seller and buyer and what are the documents approved by FTA. For example, credit note, debit note, summary invoice, agent invoice, sell bill invoice, all the other documents list will be here. And also he stored which country maintain which format. For example, in UAE, it's a pinned AE XML format. In Oman, it's a pinned OM XML format. Okay. So if you are doing the export to the Oman, here I will search in SML and SMP. I will come to know your buyer is in Oman having some ASP. Okay. So if I share this pinned AE format to the Oman ASP, he will reject it. Why? Because this Oman is using pinned OM format. So as a ASP responsibility, I have to convert this pinned AE to pinned OM format and I can digitally exchange. Now here also, if you want to share any supporting document like packing list, export invoice, or any export related document, that also you can exchange. So if you see, interoperability between the two countries is very fast. And this is the major advantage of the PEPPOL 5-corner model. Now, when you see here, today, I will give you a simple example. Today, what is happening is, uh, today you are just sharing the invoices and on a last day on 28, you are issuing the invoices, but your buyer is rejecting the invoice. Then you have to pass a credit note, debit note. Now, sometimes you may not pass at a month end. It may be go to the next month. But the problem will comes because when you are issuing the invoices, it is reported to the FTA and FTA is storing in a central data platform. So the VAT payable amount for that invoice will come in that month. But customer has rejected the invoice. So you have not passed the credit note here. And because of that, when you get the payable report of VAT, you will see this amount also. So there are few things which I think under the Prakriti is going to tell you. There are few things as is it's more important to understand your current business and what will be the change. So there are few things which require to understand in terms of a business. Now, overall, if you talk about this, there are multiple things you can utilize here. You can have a real-time exchanging of the data. Plus, whatever I explain is more on a AR side. Now, let's understand how your AP process will change. So, you as a seller, you are also buyer, right? So, comes to here. So now you are at a buyer stage and the seller is all your vendor. Now, in UAE, when you select one ASP, for example, in this case, S&B, the sending and receiving is always SMB. You can't select two ASP for one TIN number or TRN number. Okay. So here, all your vendor, when they issue the invoices to you, it will always receive by SNB only. Then SNB will ask you how you want data back in your ERP. So here the automation comes into a picture. Just, just think about this. Now, when you will automatically import the AP invoice in your ERP, after that you do the approval process, three-way matching, everything. What is the advantage? First is you are booking the invoice timely, no more manual entry, no more mistakes, and you are getting the compliant invoice. See, today, if you see the Saudi, India, and other countries, the procurement team or purchase team having the most troublesome jobs because every invoice, first they had to scan the QR code, they need to check whether really my vendor has uploaded the data, it is a fake invoice or real invoice. Because if it is a fake invoice, they will not get an input tax credit. Okay, but in this model, no more validation required because you are receiving from the authorized ASP only. So this is the advantage. So you think about this model also, that you should do the AR and EP both the automation. Okay. Now here into our platform, we are giving the four options. So it's a multi-source system company, or you are using a different thing. For example, consider the case like you are using global ERP or local ERP or accounting system, and you have your own IT team or partner. So S&B can provide you the API, a near to real time, which seamlessly integrate with your ERP system, and using your ERP system only, you can fulfill your e-invoicing requirement. So sometimes some ERP is not supporting the API. So for that, we have a FTP or SFTP options where it's a batch upload through FTP and we can automate using the scheduler. So every 10 minutes, 15 minutes, data can be exchanged between your ERP to SMB middleware. So these two API and SFTP integration is there. Sometimes some ERP is providing the API. So that also we can consume. Now, second option is like there are certain service industries company, they are not doing regular invoicing. They do invoicing monthly or fortnightly. Or some company, they have a very big revenue. Their one invoice is $1 million invoice, but their monthly invoices is hardly 10 to 12. Okay. Now, they are saying that I don't want integration. You do one thing, I will give you the data in Excel. You give me the facility where I can just simply upload and fulfill my invoice. So that also options is available where we can provide you a template or you give us your file format. We can map it. You simply upload. So three steps: login, upload, and generate the invoice. Finish. So this is the second option. Third option is there are few companies, they have a very low particularly volume and they don't have any system. So they say I need a UI, where I can manually enter the data with master data. So here we are also providing this option. So overall, if any company or any group of companies, a big group, under that they have a multiple legal entities and they are using different accounting or ERP system, this is the one solutions which you can get it everything. So these are the options we are providing. Okay, so this is from my side. So Prakriti, please continue. Thank you very much.
Thank you so much, Praveen, for taking us over the five corner model, which is the PEPPOL model adopted by the UAE, and very well explaining with the help of examples how, the invoices will move from the sender to the buyer. And now let us understand in detail more about the other aspects of the e-invoicing. So again, while you have understood how does the PEPPOL, the five corner model, the framework works, let's also see that how the lookout of the business will change before the e-invoicing era and after the e-invoicing era. So in terms of creation of invoice, sharing of invoice, validation, all the processes which used to happen in a manual format where invoice would be raised in a PDF or a Excel format will be validated with internal process which may or may not be standardized, will be shared with the buyer over email. Again, the buyer needs a process to validate it and then make a payment of it. So there is a whole lot of process involved in a traditional way. Whereas once the e-invoicing is introduced and implemented in the businesses, the change that it will bring is the seamless movement of these invoices. So while the invoices are structured in XML or JSON form, which is the format which is authorized by the FTA, there will be a structured process in which the invoice needs to be approved before it has been issued. And the sharing which used to happen over email or in a paper format also takes place or takes through the service providers in a fraction of second on a near real time basis. So it becomes very quick. From the angle of the buyer, where the buyer needs to validate whether the invoice is correct or not, and as Praveen mentioned, whether it is fake or not to have proper credit of the VAT. Now, since it's going through a proper platform, the validation is automatically done within the ASP while it is moving from corner 4 to 5. So now the amount of time will be extremely reduced by the automation that will happen in the e-invoicing regime. In terms of record keeping, it needs to have data needs to be archived for 5 years. Now, if there are manual or PDFs, they needs to be manually arranged or collated, whereas in this, it will be archived in a digital format. And even for other tax purposes, for corporate tax, where you need to record or secure those financial data for a period of 7 years, there as well, collating the information and maintaining them in digital format is very much acceptable. In terms of the system changes, you might currently be using any accounting software or an ERP basis the size of the businesses. And after the e-invoicing regime, the ASP needs to be integrated in the mechanism Praveen took us in the previous slide with your existing ERP accounting system. So people do ask that whether ASP is something new or that is going to replace my accounting system or ERP. So answer is no. It's only going to be integrated with your existing accounting system in different ways and means so as to adapt to the business cycle. Again, the traceability increases and the transparency increases in e-invoicing, where all the flow of transaction has a trail, has logs which are very much traceable, and hence the chances of fraud, fake invoices, or any malpractices is certainly reduced to nil. So though the e-invoicing has come up as a mandate from the tax authority in UAE, the FTA. However, it does have benefit to the tax authority, but nonetheless, it has benefits to the business as well. So for the tax authorities, it can help to curb the tax evasion. So if there are no fake invoices or no manual invoices, which may be backdated invoices and can be manipulated, there's a clear trail of invoices, and hence the input VAT can be easily traceable. And there is no evasion of tax in that sense. It will it will create a digital trail of the transactions. And hence it's gonna increase the efficiency of the revenue that the FTA is going to earn. The initiative of the UAE to bring an ease of business also improves with the introduction of e-invoicing, where the interoperability of the transactions, which means that when invoice passes from one kind of system, say SAP, to another system, which is an Oracle, the transfer of the transaction, the invoices, happens very quickly and faster, which also gives the ease of doing business. So, the objective of the tax authority of giving ease of business also enhances. At the same time, it benefits to the business and to the authority as well as the businesses. The scope for quick, handy analysis, because all the data is digitally available, the data is more accurate and can be monitored. So if you want to analyze your transactions data, it can be done on a very real-time basis. So all the manual efforts which used to happen before, which may or may not be because of any malpractices, will definitely be curbed with the e-invoicing. The speed will be improved, the trail will be maintained, the transparency will be created, the errors will be reduced, and things will move at ease and seamlessness. Now, you as businesses, what you need to do to come to the same page and come to the adoptability for the e-invoicing is what this slide will take you through. And S&B can support you in the business analysis, in the gap analysis, the IT systems analysis, and of course, serve you as the ASP to integrate with your accounting systems. So the first thing first in the e-invoicing journey and adopting to in this regime is to look at the requirements that the FTA comes up with. Now, on a very high level basis, the FTA has come up with the data fields, the applicability, the thresholds, the exclusions. However, it will keep coming up with more regulations and clarifications as we have seen with corporate tax and VAT. So, an eye needs to be kept on all the uh, legislations which will be issued by the FTA and MOF on the e-invoicing. Next task is to assess the current system and the processes. So there are two aspects to it. One is the business process and the second is the IT systems. And both need to be looked into and mapped with the requirement of the FTA. The gap need to be assessed and then adapting to the e-invoicing needs to be done. The important step here is to select an ASP. So even that has a timeline to be mandated, where the government has come up with a timeline that this is the date when you need to appoint an ASP. And soon the tax portal will have a space where you can need to choose the ASP online, and that is available to the FTA as well. So it is again a digital way of doing thing, and the timelines needs to be followed very sincerely. Once the ASP integration is done with your current accounting systems, the pilot and test runs need to be done and identify whether everything, the movement of invoice from the supplier to the buyer and different scenarios every business might have, are running smoothly or not. And hence, it is important that utilizing this 6 months timeline from the date of appointment to actually start using the e-invoicing as a mandate has been given by the FTA. So utilize this 6 month time and follow, have ample time to do the pilot and the test runs. Even to reiterate, the voluntarily adoption or the pilot program, which has been initiative of the FTA, can really be utilized in order to make the whole process very seamless and in a good flow, compliant, so that there are no penal implications for not adopting to the regime.
Sorry to interject, Prakriti. I'm not sure if there is any technology problem. Your screen seems to have frozen. Are your slides moving? I'm not sure if other
I
participants.
am on the
Yes.
steps for adopting. Is my current slide visible?
Yes, it is now.
All right. Okay. So maybe you can see the slide now where the movement of where we have kept the steps and step-by-step adoption to the e-invoicing, right from understanding the FTA requirement to understanding the current IT system and the business processes, going for a gap analysis, identifying the gap and mending the same, appointing an ASP, choosing an integration method, implementing the technology and running the test runs. And then comes the go live. And believe me, the whole process is going to take adequate amount of time in terms of months, weeks if it's a small business, and if it's a vast, it may take months. So choosing earlier is the best that which is recommended for adopting to the e-invoice regime. Now I've mentioned about the business process and the IT systems, and we'll quickly brush through what analysis needs to be done from a business process impact. So this flow tells you that the current state, the invoicing were manually in a paper or email format. The process was okay. The approvals were manuals, and the systems were disconnected from the for the supplier and the buyer. Whereas once the gap analysis will done, the ultimate aim is to reach a fully digital compliant e-invoicing with a proper trail, integration of the ERPs, and reduced error and seamless transparent transaction flow. In a similar fashion, the IT system assessment needs to be done, and it is a transformation from the current accounting systems to the integration with the ASP and coming out with a seamless integrated ERP for the flow of the invoices. Now, it's not just the work of maybe a finance team or maybe an IT team in terms of adapting to the e-invoicing, but it's a role of all the players in a business which are involved with the transactions and the e-invoicing, including the AR, AP teams, the operations team, the tax compliance, legal team. So The steering committee of the business is required to drive this change, but all the other business teams are equally relevant here to work hand in hand and run this journey. All right. So, if we can explain it in further detail or if the time allows, Manish, how do you suggest? Or should we take up the questions?
Yes, there are few. Let me just go through one. So there is a question from one of our participants. Yes, sir. Yeah. So the question is regarding the entities for which e-invoicing is going to be applicable. We did mention about the threshold, but the slide also mentioned that it is required for all VAT registered entities. So Prakriti, can you answer that?
So yes, it is based on the TRN numbers. So even if you're not registered for the VAT, but if you have a TRN number, you are required to follow the and come into the e-invoicing regime as per the revenue thresholds.
The second question is regarding understanding the invoice and if the payment is not done within the month. I think this is related to the explanation done by Praveen on the PEPPOL model, whereby certain scenarios were given that once you have done an invoicing on the end of the month, and then it is rejected by the by your buyer subsequently, how does it get impacted, and when is the payment required to be done?
So typically the payment is not linked here, but it is the information related to the FTA about your credit rating. See, typically how it happens today when you are talking to the government project, okay? So government project has a mandate or the due date like within 30 days, 60 days, and generally typical problem comes when your customer is very big. They say I have not booked the invoice, it is not under a GRN, all that excuses are there. But in a four corner model, the intention is when you issue the invoice and when buyer access point accept the invoice, it's deemed to be accepted. Deemed to be accepted means you have not booked in your GL, but officially you receive the invoice. So it tells you that or the FTA that you have received the invoice and your outstanding will start days from that booking date. Okay. After that, you are not paying within the 30 days, 60 days. That is a different questions. But if you talk about the payment assurance, payment timely getting, it means that your outstanding days are effectively monitored by you and FTA also. So this is what the concept of the PEPPOL full contract.
Thank you, Praveen. And while you are at it, maybe you can answer the next question as well, which is regarding the reverse charge mechanism for import of goods or services.
Yeah. So generally, reverse charge mechanisms comes under a two part. One, if you are buying locally where you are purchasing from the unregistered dealer, and then second, if it is an import of services where the foreign party is not part of your VAT regime or they are not legally binding in here. So under that RCM case, it is a AP invoice for you. But under the e-invoicing, it's a AR invoice. So you will book as an expense there, but at the same time, you have to post the data to the FTA under the RCM mechanism. Just to add the two more things, like you have a agent or self-billing. So first of all, any of the crowd, if they are doing the self-billing, first thing they have to revise their contract. Contract in a sense, do you both seller and buyer need to agree who is going to generate the invoice. Like for example, in insurance company, most of the insurance company they have a agents and they have a broker. So in that case, the broker is not generating the invoices. The OEM, which is an insurance company, they are doing. So like that, buyer and seller both has to come together and decide who is going to generate the e-invoice.
Thanks again, Praveen. So what happens when our supplier is outside of people model is the next question. I think Praveen has touched upon this subject in detail. So if your supplier is outside of the people model, once the check is being done by your ASP, it will then send a message back to the customer saying that it's not within the people model and you need to remit the invoice manually the way you are currently doing. Will the invoice issued received during the quarter be automatically populated in the VAT return? Praveen, what has been your experience with other jurisdiction, whether these details are then automatically updated in the VAT return? If we talk about UAE, the MRA portal.
See, typically what happens, any country when they introduce e-invoicing, their intention is not that all that things. Their intention is collection of the data. And today you are doing the post audit. In a sense, the transaction done after that auditor comes to you or they will call and do the reconciliation. Now all will go. After everybody will be under e-invoicing, your VAT return is going to change. Today it's a summary invoice, now it's a transaction invoice. So how it will happen? That's the reason I gave the example. If you are not closing your credit note, debit note at the time of the month end, it will get reflected to the FTA portal. Now FTA will give you, this is your input tax credit, this is your output liability. Now you need to convince FTA that this is right or wrong. They will have everything. So the point here is it is all automatically updated into their database. Then if you have not passed the credit note, then you have to pay from the pocket. Next month you will do the reversal. So all your VAT return is get auto populated and you have to just confirm and file the return. So that will be the easy things from the today it will be there.
So in brief, with the introduction of e-invoicing, the way we are used to the current VAT return process will completely change with the introduction of e-invoicing. Next question is, we are purchasing from a party which is located in a country where e-invoicing is not applicable. In such a case, do we have to generate self-invoice? I think it's the same question that we talked about, that what if the supplier or the customer is outside of the peak also. So with no further questions right now, we'd like to thank all our participants to participate in this webinar. I hope that it was an informative session for you all. We would like to invite your comments. If you have any further queries, any follow-up question, you can drop your question to Prakriti. We have shared her email ID on the chat below. If any questions are there, we would collect all the questions. We will try to come with our response and share with all the participants for the benefit of all of you.
Thank you very much. Thank you,
Thank
Manish.
you, sir.
Thank you,
Thank you.
Patrick.
Thank you.